SoFi is about to have potentially their best earnings report ever in Q1 of 2025. And that's saying a lot because SoFi has an extremely strong track record of beating earnings every single quarter and crushing their own estimates. Check it out over the last 4 quarters. This is in comparison to analyst numbers. Q1 of 2024, they beat on revenue by about 4% and they beat on EPS by an insane 638%. Q2 of 2024, they beat on revenue by 5%, they beat on EPS by 60%. Q3 2024, they beat on revenue by nearly 9% and beat on EPS by over 15%. And then Q4 of 2024, that was just reported a few months ago, they beat by more than 8% on revenue and they beat by 36% on EPS. This company has a history of absolutely crushing numbers. And not only do they beat analyst estimates, they also beat their own guidance and they raised their guidance pretty much every single quarter over the last 12 or 13 quarters. One of the most consistent stocks in the stock market at crushing their earnings every single quarter. That company is potentially about to have one of their best quarters ever. And I'll explain exactly why I think that's going to happen and the setup that we have going into earnings. But first, before we get into it, if you're new here, welcome. I'm Austin. I'm a co-owner of cloudmusicsuite.com. I'm also a stock market investor. And most importantly for this video, I'm a SoFi shareholder and have been for quite a few years now. As of recording this video, we're a little bit below a double up on this stock in terms of percent gain. And this is my second largest position in my entire portfolio. So needless to say, I have very high conviction with SoFi, and I plan on being a SoFi shareholder for many years to go in the future. The next 5 to 7 to 10 years, I plan on holding SoFi shares and enjoying the ride while we see this company turn into a financial giant over time. If you want to get an inside look about any other stocks I'm holding, stocks I'm buying, stocks I'm selling, go ahead and check out the Patreon with the link in the description and the pinned comment down there. We'd love to have you. More than 110 members in the Patreon now. We'd love for you to join us in there. All right, let's get into the video. SoFi will be reporting their Q1 2025 earnings on Tuesday, April 29th, before the market opens at roughly 8 a.m. Leading up to this earnings, SoFi is actually down year to date. Since the beginning of the year, the stock is down 8.85%. And although the macroeconomic picture has been pretty tumultuous throughout Q1, more than that, it was really their last earnings report that kind of sent the stock on this downward trend. The Q4 2024 report was extremely strong. They beat on almost every metric. They had crazy growth. It was an amazing quarter. But the thing that wasn't so great was the guidance. The Q1 2025 guidance on the EPS side and the full year 2025 guidance on the EPS side was weaker than expected. Q1 guidance that was expected was for 4 cents of EPS. They guided for 3 cents of EPS. So that's definitely a miss there. The full year 2025 guidance was expected to be about 29 cents, and they guided in a range of 25 to 27 cents. So that's 2 misses on guidance, which is not a good look. Generally, if a company comes in with weaker guidance than what Wall Street expects, the stock gets sold off in a massive way, even if it's a small miss, which in the grand scheme of things, both those misses were small misses, but they were misses nonetheless, which is pretty rare for SoFi. But what I think was happening is that they were sandbagging numbers. What I mean by that is they're saying that they're going to report a lower number than they actually come in reporting so they can crush the estimates. Analysts bring their estimates down because SoFi said, hey, we're actually going to report less than we thought on the EPS side. So analysts bring their numbers down. Then SoFi management team can come in and have a great quarter and absolutely crush analyst estimates once again. That's definitely a strategy that some companies are employing. I don't know if it's the best thing for SoFi, but I do think it's what they did. And I have evidence for why I think that and why I think this is going to be a very strong quarter as it relates to profitability and as it relates to margins. And in order to explain why I think it could be a very strong quarter on EPS and on margins, I need to actually go back to the Q4 report and read a sentence to you. So real quick, in Q4, they said they had record fee-based revenue of $289 million, which was an increase of 63%, and they said this reinforces the strength of their increased mix of higher return on equity revenue. That's from that capital light fee-based revenue that's much higher ROE. A higher ROE means that the company's more effectively using their equity in order to generate profits. And one of these areas that's capital light, fee-based, that SoFi has been focusing on a lot over the past few quarters is the loan platform business. And almost all all of the news inside of Q1 was about the loan platform business, big deals signed, etc. I'm going to go through all those news reports that SoFi has released over Q1 and show you what I'm talking about and why I think it's going to be an absolute banger of a quarter from a profitability standpoint in Q1. The first one from January 16th, SoFi and PGIM Fixed Income announced a $525 million securitization agreement, signaling continued demand for personal loans. Good news. Next, they said SoFi Plus membership now offers $1,000+ in value. That's not necessarily part of the loan platform business, but that is another capital light fee-based revenue stream. Next up, on March 3rd, SoFi closes $697.6 million securitization of loan platform business volume. And then a huge one just a few days later, March 13th, SoFi expands loan platform business with $5 billion agreement with Blue Owl Capital Funds. So pretty much all of the news inside of Q1 was signaling that they're focusing on that capital light fee-based revenue that has a higher return on equity. That's going to bring crazy profits to SoFi. Now, I don't know 100% sure if they're going to see all of this benefit in terms of EPS inside of Q1. It might take a few quarters for the benefit to actually show up. So it's possible that they still have a little bit lower of an EPS, maybe 3 cents, 4 cents, or 5 cents, but I would not be surprised at all, assuming we see the benefit of some of these deals coming in Q1, then I could see a 6 cent, 7 cent, or 8 cent EPS. And that is definitely going to show shareholders of SoFi that they were definitely sandbagging when they had those full year 2025 guidance numbers and the Q1 2025 guidance numbers. So what that's going to do if they have a big time beat in Q1, analysts are going to adjust their expectations for Q2 and 3 and 4, and thus full year 25, bringing more wind in the sails of SoFi. I love what SoFi is doing from an execution standpoint with their different business segments. Some of their business segments are very consistent, slower growers that are extremely profitable, and they're focusing on making them more profitable. And then some of their business segments are crazy growth engines. So when an investor looks at SoFi, they can see we have crazy growth, like with the financial services segment, for example. In the last quarter, they had 84% growth in the financial services segment, while the other two segments, lending and tech platform, had much lower growth, but they brought in the majority of the income for the company. So they're able to focus on generating massive income over here with the slower growers and generating massive growth over here that will eventually turn into crazy amounts of income for, let's say, the financial services segment. Once it slows down in growth, they can kind of shift their focus to profitability of that segment rather than putting so much resources into making sure it's growing like crazy. They can put their resources and time and energy and effort into making sure that the contribution profit from that segment is growing like crazy. SoFi is doing it better than any other fintech or neobank out there. And I'm very glad that we have someone as hungry and focused as Anthony Noto at the helm for SoFi. Outside of EPS, outside of margins, I think this is going to be a banger of a quarter for SoFi. Financial services growth is going to be insane once again. I think those tech platform numbers are going to get a little bit better inside of Q1 because those deals that they sign, they take a lot longer. Those sales cycles are much longer than, let's say, bringing a new member onto the platform. And like we just saw, the lending side with the loan platform business has had a very strong Q1. It's just a question of whether or not we see that benefit all inside of Q1, or are we going to start seeing that benefit in Q2, Q3, or Q4 of 2025. That remains to be seen, but I'm definitely looking forward to earnings on April 29th. That's Tuesday before the open. I will definitely be recording a video after earnings, reacting to them, my takes, what I think about it, and what it changes about my conviction with SoFi. Let me know in the comments below if you think that Q1 guidance on the EPS was sandbag and they're going to come in and crush that, or if you think they're actually going to report a somewhat weak Q1. Also, let me know if you have a SoFi position and how long you've been holding SoFi shares. I'd love to hear that in the comments below. Definitely one of my favorite parts of posting here on YouTube is having some conversation with you guys in the comments section. I appreciate you being here in a major way. Thank you so much. Have a great day.